Hey everybody, just move this mic. There we go. How's everybody doing to evening? Lawrence here from Financial Thing. Thursday evening live stream. Hope you're having a really great week. We have a very special guest this week. Peter Reed will be here from Assetz Exchange in just a few minutes. Be joining us live. We're going to talk about what's going on with Assetz Exchange, their business, and also talk maybe a little bit about Assetz Capital, since they do share the first part of the name. Thank you for joining. Please hit that thumbs up if you can. Helps out the channel a lot. It only takes a second to do. The big thumbs up. This will be the final guest for the month of May. Obviously, we're coming to the end of the month of May, and then June we'll be here next Thursday, and then possibly one stream the following week, and then that will be it for a couple of weeks while I take a little holiday back to the UK. I'm actually going to meet a couple of people over there that I will be taking videos when I go to do that, so be some good content. By the way, if you haven't been to the website recently, go check out financialthing.com. You can see here there's a new video with Cufflink Q&A session that I did with Paul Ager, where we talk about risk. It's also up on the YouTube channel right now, so go check that out. Some updated reviews and whatnot. Always interesting stuff at the website. And yeah, please check out our sponsor of the show, of course, Cufflink. Up to 9.73% gross interest per annum, over £250 million of property-backed UK investments made since 2016, zero investor losses to date. Your capital is at risk. Don't invest unless you're prepared to lose money. Of course, we all know there is risk in peer-to-peer lending. You can join at join.cufflink.com/financial-thing. So if you want to go get an account and you don't have one, you want to go check out Cufflink, please do that. Big supporter of the show. Any time that you support the sponsor of the show supports what I'm trying to do here. Very much appreciated. I think that's about all of the housekeeping. Hello to everybody. Oh yeah, Tina Turner died. That's a shame. But without further ado, let's go ahead and get Peter Reed from Assetz Exchange in here, and we'll get this show on the road. Hang on just one second. Make sure I Skype the right person. Okay, there he is. Live and in full effect. You can hear me okay, right, Peter?
Hello, Lawrence. How are you?
I am very, very well, thank you. How's it go? Where are you again? Tell me where you are.
Just south of London, near Guildford.
Guildford. Okay. I don't know much about Guildford, but
there isn't too much to know, if I'm honest. It's
Isn't
just
there
got
a
very
tavern?
expensive houses and lots of bankers and lawyers around here.
Isn't there a tavern there, the Guildford Tavern, or am I think
there might be a few. I don't know that one particularly well, it has to be said.
Okay. Just ignore me then. I don't know why my video is doing weird things, but hopefully everybody can hear okay. Just let us know in the chat if everything sounds okay. I think everything is fine, but we'll proceed along as well. First of all, thank you for joining and taking the time to come onto the stream. Very much appreciated.
Thank you very much for having me on, and thank you everybody for listening to me. I'm sure you've got much better things to do on a Thursday evening when the sun's shining for the first time in 6 months.
No, they of course they don't have anything better. They want to come and hear all about Assetz Exchange. That's the most important thing. So, hey, I was going to ask you. I think you're a little bit younger than me, but sometimes I talk about stuff here that's not really related to peer-to-peer lending and investing, but we do talk about saving money. Do you remember this brand when you were younger?
SodaStream?
Yes.
Yeah, we still got one.
Do you really? Well, see, I used to make Coke with this stuff when I was a kid, right? That's why I have all these bad teeth. And I was talking to my lady, my girlfriend. She said she was drinking all these cans of this carbonated water every week. It's quite expensive, right? And then I saw this thing on Amazon, this Soda Stream, and I remembered it from when I was a kid. And now it's really changed both of our lives because we just make this carbonated water at home and you get the little drops of flavor. So you can get lemon and lime. You just add a couple of drops into this thing and it tastes 100% like those carbonated cans that cost about 50p a pop. I don't know how much they are in England, but they're about 50 cents or something like that in the US. But that can add up if you're drinking, 3 or 4 of them a day like we were. All of a sudden you got
absolutely.
Yeah. So if anybody hasn't gotten one of these, they're amazing, life-changing. So and you still have one, you said.
I still have one. Well, I wasn't like you. I used to have them when they were like glass bottles, much smaller when I was younger. And you used to have to screw them on into the thing. And then these ones, we got the one like you, which is much easier. And I got that a couple of years ago, just because the children like drinking fizzy water. And again, as you say, it's expensive. So it's much cheaper now.
It is, and I never liked fizzy water, funnily enough, ever. And then, boom, I'm a convert. Anyway, on to more important things. Thank you again. It's been almost exactly, well, not quite exactly a year, but you were here on, I believe, June 22nd of 2022. So it's been almost a year since we had you on live. I wanted to ask you, since we last spoke a year ago, you had spoken about some goals that you had hoped to achieve with Assetz Exchange. And by the way, we're going to talk about, people have been asking me about Assetz Capital. We're going to get to that good stuff later on. But since we last spoke, what are some of the goals that Assetz Exchange and yourself and your small team have been able to achieve since a year ago?
A very good question.
Or in general, not even just
in general.
Yeah.
I think going back, I think there was we were finding our feet in 2019, 2020, and then in 2020 we launched our first property, which was tenanted by a charity called NACRO. That was and they had a contract with Nottingham County Council, and it was really sort of like, we'd managed to sort of like address most of the problems that we incurred when we were trying to go and buy a property. It delivered benefits for the investors. It was a competitive yield. The fact that you had these internal repairing leases meant that it was scalable because we didn't have to get involved with the properties that often. And they had a CPI link, which was great. The counterparty was very big. The leases were multi-year leases rather than ASTs. It was good. We finally found out how we were going to deliver for people. And 2021, it was just trying to roll that out. And then in 2022, it was like, we need to make a profit. We're no good to anybody, not our investors, not the regulator, not our shareholders, and not ourselves, unless we can actually pay our way. So that was really the goal. We have an October year end. So in October 2022, we delivered a very modest profit. I think it was £170,000. Which was great. It kind of proved that we could do it. We also put some salary increases up because we were not paid very well, and that was very difficult to maintain motivation, etc. We're still not paid what I would call market rates. That doesn't help the fact that we're 3x investment bankers, but I don't think we expected to be paid anything like we were. But I think we want to pay the bills, and we're not quite there yet, but we did do some salary increases. So that was a big tick. Getting to October and having sort of like sourced enough properties to be able to deliver for our investors and deliver for our shareholders and pay ourselves a bit more. So, that was great. Has to be said, the goals shifted very dramatically following the rate rises that began last year and the kamikaze budget. I'm being very candid with you. This has been the toughest thing that we've ever faced so far as a team. fine, it's very difficult finding a fee and trying to work out a product and starting a business. That's all very challenging. But things that people refer back to, things like COVID, with hindsight, they were not too, they might even have been a catalyst because people were sitting back at home with not much to do and money to invest. That's not the case now. You've got the cost of living crisis, so people aren't saving as much. You've got a lot more competition from cash ISAs, and you've got a lot more uncertainty, and people are just a lot more cautious in that environment. So the goal very quickly in autumn last year was, can we source products that are competitive still, and can we do it in sufficient scale to survive? And can we just still generally be attractive to people and be of relevance in this very, very different environment that we now live in? That's still very much work in progress, and it's been a tough gig this year, without any doubt.
Yeah, and people start to change what they expect to get from investments. If the interest rate returns of certain peer-to-peer companies are on the lower end, like companies like LoanPad, yourself, where they were very reasonable returns, and these inflation numbers start to come up, and the banks are putting up their interest rates, all of a sudden, investors start to expect you to deliver more than what they've gotten in the past. I imagine that's very challenging. So let's talk about Assetz Exchange's portfolio right now. Where do you stand with the size of what the portfolio is?
So we're almost, I was looking just before your show, and it's almost bang on 20 million.
Mm-hmm.
We did repay a large development loan, which was unique on our portfolio, in that it wasn't property and social property. So that was 1.2 million. And then we've got some show homes and things like that are being repaid, and those are being replaced by properties. And our focus now is entirely on these, what I would call they're just regular residential properties that are tenanted by these charities who provide a home. Charities, registered providers, non-profit organisations who provide a home for vulnerable people. Mm-hmm. And that is now our focus. And we've done 5 so far this year. And my colleague James has been working very hard, and the pipeline is building up slowly again, which is great.
And for anybody that hasn't invested through Assetz Exchange, what is the minimum investment amount that somebody could come in and try the platform for?
£1.
Oh, that's it?
Yeah. So we split each of the properties up into units of £1. It's not exactly £1. It depends, because the algorithm, when we first started, I call it an algorithm, it was just a formula. We tried to price it relative to the RICS value. So sometimes if it's £1 and 1 penny, it means that once you add in all the costs of doing it, it's slightly over the RICS valuation. If it's say 99p, it's slightly under. Mm-hmm. But it's generally units of £1. And this is what I say to people who, I think when they see us, they say, you're small, interesting, but nervous about committing to you. And it really doesn't take too much. I mean, you could put £100 on, you could sign up very quickly, and then put that in 5 properties, and then leave it for a month or 2. And if you like it, then that's great. If you don't, you can just sell up and take your funds out and move on.
Sounds pretty simple. Peter, so on average, what kind of returns have investors been seeing?
So I was just doing a little bit of digging before speaking with you. So the average current yield across the portfolio is 6.02%. So that's what the properties are delivering at the prices they're trading for at the moment on Assetz Exchange.
Okay, it's not too bad. You're doing a lot of social, I would say, social goodness. Is that even how you would say it? Social goodness things within your business about what you're providing with the housing. Tell me, is that the right word?
We don't market ourselves as an ESG product. Mm-hmm. I think there's a fair degree of cynicism about all of that. And if you look at the REITs who also invest in a similar space, I'm talking about Triple Point, Civitas, and Home REIT, then they've kind of been provides justification for a fair amount of cynicism about investing for good in this area. And the main reason that we focus on this is because it's sort of like ticks all the boxes as far as what investors will want. So these organisations that provide homes for vulnerable people, sadly they have to pay over and above market rates. Because there's not very many people prepared to provide properties for them, so that's investors get a high yield from them. We also sign long-term leases, so they typically vary between 5 and 10 years, and that's what investors also want, is they want long-term stable income. In the case of NACRO, which is a big partner of ours, they have a contract with the Ministry of Justice, who pays their bills, but they also get support from the local authorities. And in the case of Golden Lane Housing, who are the other big operator that we work with, that's all paid by the local authority, who in turn claim the money from the Department of Work and Pensions. So you've got some very good counterparties on the leases there, and they're very large organisations in their own right, so that's important from an investor's point of view. And then they sign what we refer to as internal repair and insuring leases. So if the roof falls in, then that's our problem, but that's covered by property insurance. But if the kitchen needs repainting, or the general wear and tear that properties go through, that's the responsibility of the tenant, which isn't the case if you go and buy a normal buy-to-let property. That's the responsibility of the landlord. And then what has been a really good selling point for us is that these leases are linked to CPI usually.
Okay, explain how that works.
So what happens is that in the leases, it does vary, but for the main part, there is the rent goes up in line with CPI, and the rent goes up for the year to September, but it takes effect the following April, and it actually gets paid in May. So if the property from 2021 to 2022 September, that's how the calculation is, and then that increase in rent takes effect in April, from April the following year, and so it happens in May. You get the payments in May. And they, because they're a government, they don't question it. It's in the lease. They just get on and pay it, which has been absolutely brilliant. And I've got a few statistics here actually, which kind of show the impact that has. So the people who invested in our first property in October 2020, they're now getting 7.8% net yield on that, because it's had 2 rounds of increase in inflation. And the yields, I was looking at so we had 20 of our properties went up by CPI last month and taking effect this month. So the yield of the launch price yield of the properties we did in 2021, we launched that on an average at 5.5%. Those properties are now delivering 6.1%. So that's obviously helps. And likewise, last year, for the yields on the properties that we did in 2022, the average was 5.36, and the current yield on that one of 5.9.
Okay, how long do those increases stay in effect for if the rent goes up connected to the CPI? How long does it stay in effect?
In place for next year, and then there will be another increase by however much it goes on to September 2023.
So it's actually a 12-month increase, is that right?
Yeah.
Oh, okay, okay. So it's not.
And then it goes up again by however much CPI is.
That's good for investors then. if the
Yeah, it's very,
inflation's
very good
high.
for investors. Absolutely. Yeah,
Yeah.
it's been brilliant. And it's been a real, people go, yeah, and this is the reason we invest with you per se, rather than, well, most people, they have a bit with us and they have, bits with other peer-to-peer platforms. They don't say you're better than the others. They're just interested in us, and they like us because of the inflation link in the leases.
Okay. Somebody just asked in the comment, Annabelle, actually, I think this is a good question. She said, why do you put your rents up by CPO? I think she meant CPI and not RPI, which includes property.
So that's what I think came down to George Osborne. I think he put it down to CPI because it's cheaper for the government. So all the government departments work off CPI. I think we do actually have one. The one in Devon, I think, is on RPI, but that's the only one that's on RPI. And essentially, we have to take what we get given. We do argue a lot with them, but if we're offered CPI, and that's what they offer other landlords, so we have to take it, sadly.
That's decided by the companies, isn't it, that pay you? Is that correct?
Yeah, and
and
that's decided by the local authority.
the good old local authority.
Yeah,
Don't
exactly.
you just don't you just love it?
I've got no complaints about the local authorities. They're brilliant payers, Lawrence.
I know they're paying you well. It's a good thing. It's one of the few good things that they do. Have you had any issues with any of the rentals that are in the portfolio? Because I would imagine, I mean, you're technically getting paid through a third party. Have you had any problems with anything in particular when it comes to these properties?
Yeah, we've had one. There was a property called Benson Street, and again, it was at a time in 2021 when we were still finding our feet with these, and we bought it from a developer who was also going to be the tenant, and they were small and inefficient and useless, and as a result, but they were on the hook for the rent, and they were just slow. We used to have to badger them the whole time. Why haven't you paid? Why haven't you paid? And then we have worked with them because essentially they couldn't do what they originally wanted to do with the property. And so we have worked with them to go and get it used, the building used for asylum seekers, which fits in with us. And so that's back on track. We did have problems with the AST. We had a couple of errant tenants on the earlier properties we did that weren't occupied with these organisations we now work with. But no, other than those two, really.
Sounds like you've learned a lot from probably the early days, a couple of years ago.
Well, absolutely. And I think looking back, we launched 5 years after this property platform called Property Partner, and they were backed by VC royalty. The guy had the nice beard, and he looked really good, and blah blah blah, and he was in Wired magazine, and he said the right things. And they put 28 million quid into that platform, and they blew 25 million of it. But that's because they didn't learn lessons early at the beginning, and they were putting so much money at the beginning that they basically wasted it all. They should have starved them for a couple of years, so this platform learned the hard way about what works and what doesn't work, and then put 25 million quid in. But anyway,
they should have been eating pot noodles for dinner
Exactly.
instead of going out to those nice fancy steakhouses.
Exactly.
Yeah, don't get me started on them. So you talked briefly about the higher interest rate challenges. Has it been difficult to, or let me not ask you a yes/no question. Tell me about some of the challenges about finding deals now with this new higher interest rate environment.
It's been very difficult, and my colleague James has done an amazing job. We've had to go and get properties at higher yield. So again, bamboozling you with some stats I looked up. So the launch yield in this year that we've done, so the average of the 5 properties we've done is 6.7% net, and last year that's against 5.36. So we've increased the yield quite substantially there, and we did actually do 2 at the beginning of the year in Portsmouth at 6%, and then we did 1 in April at 7.5%, and we did 1 earlier this month at 7.1%. So it's been very difficult. So we did originally hope that essentially vendors would pay for the higher yields, but it has been difficult to. There was definitely a feeling of a price drop and being able to take advantage of price drops earlier this year, but that doesn't seem to have been sustained. In fact, we got outbid recently. We were one of 3 people. So there still seems to be, the property market seems to be quite resilient from what we're experiencing. I mean, it's not silly prices like it was post-COVID, but there's still, there aren't that many bargains out there that we can see. So the one that we did at 7.5% is up in Hull. Preston, and so you generally get better yields up north. So that's one way of being able to secure them. And the property that we did earlier this month is for someone with complex needs. So people with more complex needs are a higher priority for the local authorities, and the budgets are there, and they're much bigger, and they're much more stable. So sadly, if you're a young homeless man, there aren't too many options open to you. But if you do have more complex needs, then there's definitely more of an urgency from the local authority with more funds to be able to go and get that. That comes with risks, though. So the property we did then, we categorised as medium risk, and that's because you got to develop the property, so you got to adapt it to what that person needs. And in this particular case, they need specialist heating, they needed a specialist bathroom, they needed a specialist kitchen, they needed all sorts of security measures, etc. So we bought the property for 350 grand, and we're spending 250 grand on it, to put that into perspective. But so there's a risk whilst that development happens, because they haven't signed the lease, so an agreement for lease. But once the lease is signed, that's copper bottom, so the risk will go down to low probably, because it will be a home for life. It's a full repair and insuring lease, and it's linked to inflation with no caps or anything on it, so it'll be that's definitely institutional quality.
Did you say it's copper bottom? Is that what you said?
Yes, turn of phrase. It's solid.
Okay, I don't think I've ever heard anybody say that before. That's a new lingo from my brain. Copper bottom. So we got to talk about Assetz Capital. I'm getting bombarded by emails. They've closed their doors to retail investing. You have their namesake, or at least half of your name, Assetz. Are you planning on changing the Z to a S maybe, or?
No, because if you change the Z to an S, you end up with sex change in the title, which isn't very good.
That's true. Wow, that's an interesting one. Very funny.
Changing the name full stop might be the way forward to go.
Yeah, maybe. Talk to me about how this has affected the business. Were you aware of what was going on at Assetz Capital, and then planning on closing their doors to retail? How it's affecting you moving forward, and what the plans are?
It's affected us in lots of different ways. I think the first thing is that Assetz Capital have been really good to us. They've gone above and beyond in terms of helping us. A lot of our client base are Assetz Capital clients. They were very good at introducing us, first of all, to underwriters to help us initially purchase the properties, and then they were very good when they couldn't fill people with loans during COVID. They circulated emails saying, why don't you consider Assetz exchange, and we've done very, very well out of that, so extremely grateful to them for that. That won't happen anymore. So obviously their business isn't about retail investing, it's about institutional investing. So, we can no longer rely on a flow of Assetz Capital investors to keep us going. We need to go and find our own, which we do, but, we need to do it in a much more systematic way and self-sufficient way than we have done previously. So that's probably the biggest way it'll affect us. In terms of the actual change itself, we weren't given a heads up, and I'm not surprised. I mean, that would have been highly confidential. I should imagine the FCA were involved in it, and people would have. I think there was very strict obligations in terms of disclosure of that kind of information. So we weren't given a heads up. It was a shock. It did affect us. So we, as one of the benchmarks we keep an eye on, is the premiums the prices that properties trade on the exchange. And in the run up to last year, they were trading at a healthy premium to their launch prices, and then there was a sharp fall after the kamikaze budget, when people obviously took flight and decided their money was better placed in banks. And then there was some smaller price dips when interest rates started going up. And then when Assetz Capital came up, there was another massive price dip. I mean, on the same scale as the kamikaze budget one. So house prices went down. It doesn't sound very much, but it went down about $500,000 after Assetz Capital announced that they were closing their doors. There was a few isolated incidents. I mean, we got one bad review on Trustpilot, but we were able to deal with that and actually speak to the person. And likewise, there's been a bit of comment on the independent peer-to-peer forum, but my colleague Ben's very good at that, and we've been able to, just present the facts and try and distance ourselves a bit in that regard. So that's been okay. But I mean, we were discussing earlier, Lawrence. I speak to a lot of our clients, and first of all, you have to listen to them talk about Assetz Capital in not glowing terms, and then talk about Assetz Exchange.
So is the plan for you then to become more of an independent company and sort of, I won't say sever ties with Assetz Capital, but you to be more independently operated?
We were always independently operated. We were independently regulated, and we had a completely different board. I mean, the common denominator was Stuart, who is the largest shareholder of both businesses. I mean, Stuart's he's still chairman of Assetz Exchange, but he's definitely, I think he's got his hands full. So he's not as involved with us as he was prior to this, but he's still there. And I think, in a roundabout way of asking it, we've had to properly assess, not just due to Assetz Capital, but due to the new interest rate environment. We've got to have an interesting story that's relevant to tell people. And before we kind of like coattailed a bit on the back of Assetz Capital, now we can't do that. We've got to just have a complete rethink about how we present ourselves to the outside world. Yeah,
customer acquisition for any business is the most challenging part, unless your name is Apple.
100% agree with you.
Yeah. So.
And they went through some dark days themselves.
Yeah, maybe you should be called Apple Exchange. There you go.
They might have a bit of a beef with that.
Yeah, probably. Let's talk about the current market of the housing market and how that is affecting or maybe benefiting you as a business in certain ways.
Well, as I said before, we hope that we will be able to pick up some cheap houses, and the income from the local authorities will remain pretty stable or go up a bit, and that would deliver higher yields for people. But so that's been disappointing, because the cheap houses don't seem to be that cheap at the moment in our experience. But we're always out looking for bargains. So that's good. I suppose, it's a double-edged sword for us. If house prices had fallen, we could have put new properties onto the platform at good yields, but that would have undermined the value of existing properties on the platform. So the fact that the housing market has been relatively stable has actually been quite good, because people don't want to go. They go, okay, well, fine. Why would I put my money into a product that's paying 7%, but if the house it's going to fall by 7% over the coming year. So it doesn't make any sense to them. So the fact that the housing's been quite resilient has actually helped in that regard. In terms of the whole social housing side of it, I'm sure you don't know, but there's been quite a lot of activity in that, and that's helped us. So housing used to provide a home for vulnerable people and paid for by the government has been systematically abused over the past 10 years or so. And the regulator for social housing has been banging a drum about this. There was various parliamentary committees about it. And there's now a much sharper focus on good practice vis-a-vis bad practice. And we are the good guys. We are the winners in that regard, because we don't insist on 25-year leases with inflation plus 1%. We do deal with good quality counterparties rather than counterparties just set up that have very weak balance sheets. And we're happy to go and sign a 5-year lease if that's what's required. And few institutions or the other people are prepared to do that. So that's been a massive help for us. We get lots of calls these days from people saying, can you do this for us? Which has been great. That's been a real plus for us.
Okay, so some benefits have happened. Personally, what I think is going on with the housing situation is people are not wanting to sell their homes because they don't want to pay these higher interest rates to get new mortgages too. That's something that wasn't really thought about, I think, when they started to raise these interests up. That maybe they wanted to put a slowdown on house sales in that way, but the prices certainly haven't dropped because the inventory has decreased, so people don't want to sell. So
I think you're right. And how long can they hold out on that? And I think they probably would have been able to get away with it, but with yesterday's inflation figures and now the market factoring in 5.25% from the Bank of England by November this year, I think there will be a lot of pain. The housing market might yet turn ugly, quite frankly.
Yeah. I don't know if you follow this, but we've had this company called Collateral. These two Curry brothers have been on trial and convicted this past week of fraud. They were I don't need to use the word allegedly anymore because it's been found to be true, but they were basically, I think they pulled out £750,000 of investors' money before the company collapsed, and they were convicted of I think 2 counts of fraud and 1 count of money laundering. So have you been following that at all?
I mean, I've read about it, and I read the release by the Financial Conduct Authority, but I wouldn't profess in any way to be an expert on it. No, but we are at the thick end of the regulations that are now coming out from the FCA from incidents like this.
Yeah, what I wanted to ask you really, Peter, was due to these tightenings of regulations, do you think that stories like this and occurrences of bad conduct, especially within peer-to-peer lending sector, do you think those days are over now and now things will start to wash out and the sector will look better in the future?
I certainly hope so. I think there is a natural business cycle. I mean, peer-to-peer really got going post 2010, and there was a lot of exuberance in the market. And then over time, your business model stacks up or it doesn't. And I think certain platforms have closed down, like RateSetter, that were very well regarded, but because they couldn't make sufficient profit. And I think it was largely down to the cost of customer acquisition in that particular instance. And also, I think when these things start out and the regulation's light, then you get the wrong sort of people setting up these platforms, but they can only carry on for so long. So, I mean, this is another example of hopefully the system becoming and platforms becoming more stable.
Mm-hmm.
And hopefully, I mean, but I don't know, Lawrence. I mean, I don't know other platform operators well at all. I certainly speak to people, and they all speak highly of LoanPad, Crowd Property, Cufflink, and various others. Those are the ones. But you do come across people who go, "Oh, I've got such and such and such a thing," and oh, it's still taking time to get out of it. Blah blah
Mm.
blah. Um,
The weather's
um,
bad. Oh.
but and hopefully this will be there will be I seriously think that the peer-to-peer industry delivers a benefit for investors. We give investors an important option and an important string to their bow. So hopefully this will be the last of the fraudulent ones that there are.
Let's pray to the peer-to-peer lending gods that is it. Peter Vince, he's somebody in the chat here, was asking. He said, "I'm not familiar." Let me put his comment up on stream so I can read it. "I'm not familiar with the platform. Could Peter quickly explain how to invest? Are there loans in a pool, or do we invest in specific loans? How many are available, and how often do new prospects appear?" So maybe you could just give a quick overview exactly how Assetz Exchange works.
For sure, yeah, absolutely. There is no pool. It's all individual loans. So and each loan is a property. So what we do is it's slightly contrived. There is no genuine third-party borrower. When we find a property, we go and set up a limited company, and we get the tenant ready, and we buy the property, and then investors on the platform lend money to the limited company, and then they use the proceeds of that loan to go and purchase a property. And the limited company is controlled by effectively the creditors, the lenders. There are very restrictive articles of association for each of the limited companies, which mean that effectively, if anything happens with the property, then lenders have to decide what they're going to do. And that's done through a voting system on the platform. Each of the properties themselves are split into units of £1, and each of the property has an exchange, hence our name. And the exchange is, like an exchange for any stock, for example, on the stock market. It's an order book. You put your price in at the price you want, and it's matched if there is a corresponding buyer or seller. Otherwise, it waits in a queue until there is a corresponding buyer or seller. There are 60 properties on the platform at the moment, and the liquidity is usually quite thin on all of them. Most of our investors are building up a portfolio for later on, so they will put a small amount of money in each property and try and build up an alternative asset as part of their portfolio. So our typical investor, if there is such thing as a typical investor, will have 70% in the stock market, a bit in crypto, a few government bonds, and then this will be the alternative asset that they do in that regard.
Okay.
And then they just want the monthly income, and then when they want to sell, they put an order up for it to be sold.
Do things tend to move pretty quickly on the secondary market as far as people reselling things? Is there like a lot available? If somebody were to sign up and go put some money in now, would they be able to spread their money around?
Yeah, I mean, it's a buyer's market at the moment on the exchange. There is, I mean, the liquidity is concentrated on the new prospects, and that was the other part of the thing. I mean, we try and put 1 or 2 new properties up on the platform each month. That's what we try and do, and the liquidity is mainly around the new properties. But that said, if you had, say, £10,000 and you wanted to spread that across 20 properties, it would be very easy for you to do that on our exchange right now. If you wanted to sell £10,000 on our platform and you had it spread across 20 properties, it would take you a bit of time. We provide the volumes for the past few days for each of the exchanges underneath, so you can see the kind of appetite that's underneath them. And hopefully, Lawrence, when our marketing kicks in at the end of the year, when we've got a new website and things like that, then hopefully there should be lots more buyers out there.
Now you got a pretty new website coming, huh?
We hope, yeah, absolutely, working on it.
That sounds cool. One other thing I wanted to ask you, do you invest in other peer-to-peer lending companies yourself through them, or have you dabbled at all?
No, I haven't, I'm afraid. And I think I've definitely looked into LoanPad. They have a very good reputation and people like them a lot. And they seem to be very simple, which is good. So thinking about LoanPad.
Yeah, okay. I
think the other thing as well has been quite interesting is that, I think people, the yields they've been able to get have been higher than inflation. And I think, LoanPad and ourselves, I suppose we are, but they've definitely increased. But I think you've got to consider risk in all of this as well, and it'd be better to just not have a yield that isn't quite as punchy, but at a lower risk.
Mm-hmm.
My point of view. But anyway.
Yeah, I agree. If anybody hasn't hit that thumbs up button, do that for Peter. He's taken time out of his evening. He's left his fish and chips on the kitchen table, getting cold, to come speak to us. And as we come to the end of our stream, anything else that you would like to tell people about Assetz Exchange, why they want to come put some of their... I learned the word is spondulux. I thought it was spondulix. I learned this word last week, but they want to put any of their spondulux, which means cash for anybody that doesn't know, into Assetz Exchange.
Well, I think the 30-second elevator pitch is that we've got these properties. They're normal, regular residential properties, so you've got that backing the investment, and in a worst case scenario they can be sold, and you'll get your funds back. They've got excellent quality counterparties tenanted by these large organisations that provide a home for vulnerable people, so you're actually making a material difference to someone's life, and the yields are going up because they're linked to inflation, but also because the properties that we're putting on the platform now are much more competitive. The last two certainly 7.5% and 7.1%.
Okay. We have another question here from Dave Dawson. How has the new government regulations on rental properties affected things for Assetz Exchange?
Well, I mean, that's quite a beast. There's lots of it. So certainly in terms of the energy efficiency, we've had to be very careful about how we go and buy properties, and we try and buy properties that are a C, and we do consider properties that are not a C, but the vendor has to pay for them first to be able to get them to a C. So there was a property that we were hoping to bring on this month up in Hull, but that's been pushed back by a couple of months because we've had to renegotiate with the vendor to it's actually transpired that he's just going to pay us to do the work once we buy it, but usually we'd insist on it, so that's definitely adding. In terms of the regulations that are coming in to give tenants more rights and protection, they don't apply to us because these are corporate leases that we tenant the properties with, and so they're exempt from the legislation that relates to ASTs. So that side of it doesn't affect us very much, but I think without any doubt we're going to have to budget for investing more in our properties. Everybody is.
The government is your friend and the enemy at the same time, right?
As is always the case.
Always the case. Well, we've been going for a little bit, almost an hour, so I want to thank you again, Peter, for coming on and being so transparent. That's one thing I've always enjoyed about speaking with you. You always put things out on the table and you don't pull back any punches, so that's definitely appreciated. So yeah, we'd love to have you back in the future, and best of luck with Assetz Exchange. If you guys want to go check out Assetz Exchange, It's Assetz Exchange with a Z and not an S, .co.uk. And go check them out. And for as little as £1, I don't think you could buy anything for £1. You can't even buy refreshers anymore for £1. So go check them out and have a poke around there and see what you think. And Peter and his team are always there to answer any questions that you have. And this is not a paid interview. I always have to put that up front. This is just something that I do to give you guys more information about the options that are out there for us all as investors. So thank you again, and everybody really enjoyed it. And
thank you.
Appreciate
thanks,
it.
Lawrence, and thanks everybody for listening to me.
They did enjoy listening to you. Said they have better ways to spend their Thursday evening. I say that every week. I don't know why you guys are here on a Thursday night. I'm sure you could be doing something better, but they love coming and tuning in and having a bit of banter. So appreciate it, and best of luck, best wishes to you, and we'll speak hopefully soon.
Thanks very much.
All right.
Thank you.
You're
Thanks,
welcome,
everyone.
Peter.
Cheers.
Bye-bye.
Bye.
So there you have it. I don't know why my video is doing robotic things today, but it appears to be very jumpy. I'll get that sorted out by next week. Appreciate everybody for joining in, the good questions. Hopefully you enjoyed that. Don't forget to check out the sponsor Cufflink. Also go check out Assetz Exchange. And from Harley, who is having a good snooze this evening or today, and myself, I will bid you farewell. Have a great evening, everybody. We'll see you next Thursday, same time, 7:30 p.m., all being well. And that's all I got for you today. Take care. Bye-bye.